my YouTube stream. Welcome to my YouTube stream. I recommend you guys follow me on Rumble because I always start my streams on Rumble. That's my home base. Rumble is home base. Okay, that's me. Rumble is my home base. Free speech. I can play whatever I want. I can say whatever I want. No copyright strikes. I'm good at Rumble. Okay, so as I was saying before, we got 3 impulse legs here. 1, 2, and then 3. Alright, so what you were supposed to do as a trader was measure the impulse legs with your Fibonacci, right, and find an entry. This blue box is the 930 gap because regular trading hours, it gives off a gap right here, as you can see. This is the gap. Let me delete it. Boom. You see the gap right here where my crosshair's at? That's the gap that I'm talking about. Let me delete these dotted lines. Oh my goodness. How many dotted lines do I have here, bro? Alright, so you see that gap right there? Very influential. And these black lines is the new week opening gap on the electronic hours. So let me put back the close to the open. 930 gap. Boom. Okay. Alright, and we're gonna put this to the back. Send to the back. Boom. Alright, so you can see. As you can see, the bodies of the candles are staying below the 50% of this gap. Okay? Below the 50% of this gap. See how the bodies of the candles are just staying there? And then you see this accumulation right here. So what you see here is an accumulation of orders after 10 o'clock, then 11, and then 12. And then around 12:40, 12:45, we produced another leg down. Alright? So if we take our fib right here to here, the first impulse leg, everything was above the 50%. That was probably a 62 retracement or 68. So these are your points of entries right here. 68, boom. Alright. So we have the 62% retracement here. 1, 2. And then it started to leave here. Okay. Everything is just repetitive. Okay, so this is you're not gonna get this in like a day. It's just I'm giving you the mentor. I'm giving you the real-time price action that you can take from it, and I'm also giving you commentary on top of that. Okay, and I'm isolating what things are supposed to look like. Okay, so it gave 3 impulse legs, 1, 2, and 3. Alright, and this red shaded area, if you've been here since the beginning, you know what this red shaded area is. It's an order block. And this yellow box is a fair value gap on the daily. I'm guessing, I hope we get there by Wednesday or Tuesday. Yeah, by Wednesday. I think Wednesday would do it. Yeah. And then Friday we should just go up. I don't know. Hopefully Wednesday. Okay, so we're gonna see what's up right here. Boom, 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 boom. Boom, 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 boom. Okay. Alright. Okay. Alright, so that's what I was explaining. Always have your Nemo. That's very important. What the hell just happened? Something happened here. Did I add a section? Yes, I did. Fuck. I don't know how I had it. I don't remember how I had it. Whatever, this is. I'd rather have this up there, the dollar, XPX. All this is extra shit that I don't need. This is all Forex. This is options in crypto. Alright, let's look at crypto. Alright, so this is Bitcoin. Let's look at the monthly. Each candle is 1 month. As you can see, this is the order block. Literally hit the order block and then went down. That's awesome. Awesome sauce. Okay, now let's go to the weekly. Weekly looking very heavy still. Long wick. Oh my goodness. Left a long wick. Okay. So it went. Damn, it went all the way back up here. Filled in the gap completely. Almost completely. And then it went straight back down. Yo, Bitcoin is fucking crazy right now. So for Bitcoin, I'm gonna tell you to wait till it gets into this orange red area. Once it gets into 70,000, 65,000, I'd make buys, holding for long term buys. Hopefully, I think. I'm not financial advice. But ICT told us this is going to 25,000. So it's going all the way down here. Possibly under here. I don't know. I don't know. Because it did it once in 2021. November 2021. That was like 4 years ago. And it did this. I don't know. Someone's liquidating the market, though. The thing is with Bitcoin, this is the people's market. Okay? This is people. And banks. And institutions. So there's no really any regulations with Bitcoin. Right? So it's gonna... There's no guarantees like NASDAQ, XPX, or the Dow Jones. Right? So do what you will. I'm not giving you financial advice on that. You got me fucked up. No. That's with your own eyes. You do whatever the fuck you want, man. I'm gonna be honest with you, bro. Like, I'm not gonna be responsible for that. Alright, so I explained what it was going on in NASDAQ. I explained why we stopped up here. There's an OB here on the 4 hour. Okay, this is your 4 hour OB. Hits it, went down, boom, boom, boom. Gives us 3 legs. Time based legs. Okay. This was 9:30. 9:30. 12:45. Well, 12:30. And 2:30. 2:45. Okay. These were the times. As you can see, the new 4 hour starts at 2 p.m. and then it goes up, projectionary phase, then goes down. And as you can see, the new 4 hour starts, projectionary phase goes up, consolidates, and then it goes down. Alright? That's how it works. Yo, I'm learning a lot with you guys, if you believe it or not. So it goes from 6 a.m. new 4 hour, 10 a.m. new 4 hour, 2 p.m. new 4 hour. Okay. So right now, the new 4 hour is at 10 p.m. and then 2 a.m. and all vice versa. Okay. So this is, if you want to take a little trade. All right. Look at this projectionary phase. All right. So this low was made, but I think we might be able to get this. So if I place a buy of one contract right now, boom, I would take it to here. What is that? 95. Let's do $100. I'll make $100. Okay. You see, I took the trade. I made one contract. Okay. Stop loss I'll risk $40. $40 right here. I'll risk $40 to make $100. Okay. And all I want is this. I don't care if it goes higher. I don't care if it goes lower. Okay. That's all I'm risking. Let's make $100 while we wait. Okay. So we're gonna do this, and then let's get started with the videos, because I spent 30 minutes talking, and we're gonna spend another 2 hours watching videos. So pay attention and write your notes. I'll talk. I'll stop in between. This is the core content.
Welcome back, folks. This is month 2 of the ICT mentorship. This is teaching 1 of 8 of the second month of 12. And we're going to be dealing specifically with growing small accounts without high risk. Now, before we start, obviously, we need to know what it is that we need to avoid. The first thing you need to do is do not try to rush to make massive gains in either pips or percent returns. I can tell you I fell victim to this as a new trader. I went in thinking I can get rich really, really quick as a trader after I started seeing how fast profits can come. It kind of makes you think that it's like the lottery every single time you sit in front of your computer, and it's not the case. Okay, so as a new trader, the first thing you want to do is kind of suppress that desire to try to chase massive gains, and it's either in a total number of pips, because it seems like it's a trophy thing to tout that on the internet or on forum or mediums like Twitter or Instagram and Facebook. It's not important how many pips you have, and it's not important how much money you make. It's the percent returns to actually make consistent wealth building, and don't chase high percentages. You don't even really need high percentages to build wealth. Do not open yourself to large risk in hopes of equally large returns or profits. It's not necessary for you to have very much risk on your trades to make a lot of money. It's rather myopic, and it's a misnomer for new traders when they come into this industry. They think they have to have a lot of money and they have to put a lot at risk to make money. Well, that's not true. And the only reason why they think that is because they're trying to make money quick, lots of money real quick. Do not assume taking small risk-defined trades will not grow your account. This is one of the lessons it took a while for me to learn early on in my career. I thought I had to have a lot of risk on the trades, and otherwise I wouldn't see my account grow. And that's not entirely true. Once I understood the compound interest factor, it doesn't take much time at all for your money to grow. And it doesn't matter how much you start with. You can start on a shoestring budget, even as little as $100. $100 can grow exponentially over time if you submit to it. And now think, if everyone would start with $100, number one, you would never be broke if you made mistakes initially. Secondly, who says that you can't add more money to it once you become more confident? See, that's the part everyone jumps ahead. They want to take everything they're willing to risk and lose, but not really lose it, and they put it in their account, and they put it all on 1 or 2 trades, and hopefully they get a lottery win. You don't need to do that. You don't need to do that at all. You can actually define your trades with very, very low risk in terms of total equity, and then watch it compound over time. That's how you grow an account. Do not sacrifice trading equity for poor planning or lack thereof. Like I just mentioned in point number 3, it's very important that you understand that there is not a necessity for large risk to build wealth. You need to have consistent parameters that will allow you good risk models for each trade with well-defined low-risk parameters. The setups need to have well-defined risk, 2% ideally if you're a new trader, but no more than 2% on an average. You don't need to have any more risk than that to build wealth. What do you need to aim for? What specific things should you be focusing on going forward if you have a small account, and how to start building it up? Well, you need to determine how realistically you can anticipate a favorable reward to risk model. What does it look like? We're going to talk a little bit about that in this specific teaching. You're going to have to learn to respect the risk side of the trade setups more over the reward. Too many times, and I did this too as a new trader, we don't think about losing money, because after all, we're always going to be right. The fact that we think about the profits solely and we don't really concern ourselves or respect the fact that we could lose on every single trade. How many times have you started a trade as a new trader? Now, maybe you were nervous once you first got in it, but when you first put the trade on, greed puts you into that trade. Greed puts you into that position where you're trying to make money. But once that transaction starts and you're in the marketplace, that greed transfers into fear. I hope I make money. What if I don't make money? See, when we first put the trade on, we're not necessarily fearful unless we're fearful of missing the move. It's greed that puts you into the trade as a new trader. But you need to learn to respect the risk side before you take that trade and execute on it. Because if you don't focus on that side, that's the part that hurts you. Nobody gets broke by taking profits, but they all go broke by taking too much risk. Identify trade setups that permit 3 reward multiples to 1 risk or higher. It's very important, and we're going to talk about specific numbers and how it's actually measurable in terms of odds. But you want to look for trade setups that have 3-to-1 payouts. And for every $1 you're risking, you hope to make $3. Frame good reward to risk setups that have little impact if unprofitable. Again, that gets back to having very small risk. If you have very small risk, well-defined trade setups, you're never going to worry about, well, you might get a loser here and there, and you might get a string of losses, but it's not going to take you out of the business. It's not going to take you out of your career of choice. You came into this industry to make money. You want to obviously change the course of your life in terms of financial affluency. And even if you're not trying to get rich, if you're just trying to have a passive income, maybe you're trying to supplement some of your bills, your monthly costs of living. You came in here with a monetary desire. So keep that in mind. You want to do this for a long time, not just get lucky for a short period of time and make a lot of money, because that doesn't happen. No one does that. Forex is not the lottery. All right, the reality of reward to risk ratios. Okay, what will you need to see in performance for profitability? Now, everyone thinks they're going to never have a loss. When they first start out, everyone's Superman. They can't go wrong. Their system's going to be the best thing since sliced bread. Don't worry about it. You'll never have a loser, kid. No one starts in this industry with that as a hit the ground running. You never have any losing trades. You're going to encounter that. So when we talk about accuracy, accuracy is not even necessary in terms of high-end accuracy to make money. You don't even need high accuracy to build wealth, but you do need time. Time is the missing element, and that's the secret. That's the holy grail to allow compound interest to do its magic. So my question to you is this. Do you think that you're a 75% win rate trader? In other words, every trade you get in is 75% of those trades winners. If that's the case, your win at 75%, that is actually very high. And your ratio in terms of what you're hoping to make in terms of your risk, it's really low. You don't need to have very much in terms of risk to make $1. If you had 60%, you have you have less in terms of what you have to take on as risk to make $1. But when we get to 50-50, you got to start risking $1 for $1. Then at 40%, the ideal ratio would be you're trying to make $1.50 for every $1. To be profitable when you're only 33% accurate, ideally the minimum is you want to be looking for trades that pay you $2 for every $1 risk. At 25% accuracy, now folks, think about this. If 75% of the trades that you take are losing trades, the minimum ratio for profitability is you have to look for trades that pay out 3 to 1. Now, think about this for a moment. If we look at the low end objective in terms of accuracy, that means 25% accurate. We're looking for trades that are going to pan out, hopefully, $3 reward for $1 risk. So if we have that scenario and we are able to take a trade and risk $1 and make $3 in return, we can be wrong 75% of the time and still be net profitable. Now think about that. If you grow in your understanding of the things I'm teaching you, say you become profitable to the degree where half of your trades are profitable. That means the ability for you to find 3 to 1 trades more than doubles. It more than doubles. So that means your accuracy grows, but your reward to risk ratio, if it just stays 3 to 1, you're going to have more trades that pay out 3 to 1. Therefore, your equity is going to increase exponentially. Now, what happens when your win rate goes up above 50%? What happens if you have a 65 to 70% accuracy and you're looking still for 3 to 1 trades? Your money grows exponentially. What happens when you start looking for reward to risk ratios of $5 paid out for $1 risk and you have a 70% accuracy? Suddenly, wealth is not that far out of reach. Now, looking at an example of trading with statistics behind it, I think everyone would agree that to make a percentage increase of 50% inside of 1 month is actually a pretty good feat. Now, I'm not advocating that everyone's going to be able to make 50% return in 1 month. It's not going to happen. That if we have an account that would be relatively small, and I'm going to say for the benefit of an example, we're going to say $5,000 is something that everyone's able to do. Once they understand how to trade, we're going to say that everyone is willing to put $5,000 into a trading account, and you'll determine when you're going to do that. I'll never tell you when that's going to happen. You make the decision on your own. But let's say, for instance, you put $5,000 in an account, and you use some of the ideas that we teach here, and you're able to find big payouts, big reward to risk ratio trade setups. To make a 50% return on your account in 1 month, it doesn't take many trades to do that, but it does take highly selective setups. And you have to do certain things to make this pan out. And here's the thing. Once you get 1 or 2 of them in your month in terms of trades, you can now start lowering your risk to reward ratio trade setups. If you want to stay busy, you can still do very well by adding more percentage-wise on your account, but you don't need to go out there every single time looking for big payout trades. You can get bread and butter scenarios, whether it's 2 to 1, 3 to 1 scenarios, where it's easy to get these payouts. So if you started with $5,000 and you were able to find setups that do these things, and that's what I did in my FX book for this mentorship, I show over 50% return, and I didn't do many trades at all. It wasn't many trades at all that actually brought this type of return. The profit actually grows over $2,500, and that's not bad for an account that would start with $5,000, not a whole lot of trading in the first month. That is what is possible, but not a standard. Do not expect this as a normal every single month type thing. But think about this. If you could show a 50% return just for the year, how amazing would that be if you were able to take your money and compound it where you had a return of 50% per year? That blows away every money manager's goals out there. It certainly blows away any kind of stock return, IRA or anything like that. You would be outperforming every asset class that's available to you. And you think about what you're able to do. You can do that in a month, If you could do that in 1 month, looking for high payout, low risk, imagine what's available to you. This is the one that you want to pay the most attention to. And I said you have to respect this side of it, because the drawdown is what will hurt you. It'll hurt you psychologically and it will hurt you monetarily. So as you can see, what our goal is to have little to no drawdown. Now, you're going to have drawdown. This account will have drawdown. You will see it. It's not my goal to show you massive drawdown so you can see how it comes back from it. The idea in this mentorship is to avoid large drawdown. And obviously in 1 month, taking 10 trades, I tell everybody my average goal for the week is 50 to 75 pips a week. And you can see here the average win is 51.80 pips. And with 10 trades, total haul of 518 pips for the month. And I think that's pretty consistent for what I'm able to do on a month-to-month basis. I don't try to do anything more than this. This is like my sweet spot for my performance. And I try not to do anything above this. Every time I try to do that, I get a King Kong feeling. And, you know, what happened with King Kong at the end of the movie? He fell off the Empire State Building and didn't live too much longer after that. So I learned that lesson as well in my trading. All right, so what should you focus on initially? That's right, 6%. 6% of what? 6% of your equity compounding per month. Now, it doesn't sound like much. It doesn't sound sexy. It doesn't give you the willies. Well, guess what? It only takes you 20 pips per week to do it. And it only requires 1.5% risk. And it only requires 1-to-1 ratio to do it. That means if you find a trade that pays out potentially 20 pips and you can frame the trade where you're only taking 20 pips risk, guess what? That's all that's necessary. And they happen every single day. Now, I'm not advocating looking for 1-to-1 ratio trades, but I'm going to show you by example how easy it is to get that. Once your accuracy increases and your understanding of price action, these setups are there every single trading day. Now, again, I preface it again, I am not trying to instill an action warrior hero where you go in there and you're trying to prove to the world that you can trade every single day and get your 20 pips, 40 pips, or whatever it is you're trying to do every single day. I don't think it's something that can be done consistently every single day. If you do, you're inviting losses. And there isn't a trading day that doesn't look good initially and goes sour quickly. You want to be trading in highly selective conditions. And when you do that, even with low reward to risk ratios, 1-to-1, you can still find 1.5% return payouts per week, one trade, that's all you need, and you're actually going to have a little bit more than 6%. But what does 6% do compounded every single month? It doubles your money every single year, and I don't care what your equity size is that you start with. Now, account with $1,000, your risk per trade is going to be 1.5% or $15. That's it. You're only risking $15. Now, if you lost $15 and you had a $1,000 account, are you going to go home and take it out on your family? No, most people wouldn't do that. And if you would, then you're probably not meant for trading. So what you'd be risking is 20 pips from your entry price. And your profit would be taken at 20 pips for a 1.5% return. But here's the thing. It's easy to say this in number form, but how do we find it? Where do these setups occur? Well, the 6% per month setups, they form specifically, and the easiest ones to find are looking at your daily chart, and they make it easy to do. What is it specifically you're looking for? Well, you're going to be looking for the things that I've talked about in the very first month of this mentorship. One specific is an order block, where there's a price point at which a move quickly moves away from a level. If in this case it's a movement up, we find that down candle right before the move goes higher. When price goes back down into that down candle, we have a really good probability, especially off of a daily chart, that you're going to get a 20 pip or more price swing. Now, magnified and zoomed in, we can see that that order block is noted with the two arrows drawing your attention to it. We're looking at the body of the candle, which is the opening on a down candle, up to the high of that candle, okay? And that's a fair value gap. Price, you can see, trades right back down into that level right here. As price hits that on that particular day, that's when you'd be looking for a trade. You'd be looking to go long there. okay? But not just simply as it hits that level. We're going to wait for something to give us confirmation. Obviously, the same thing occurs on a lower time frame. We look for the order block. We're just going to scale down because everything in price is fractal. So we're going to be highlighting specifically the 0.7512 level. Okay, so we have a 1 hour chart. We're zoomed in, and you can see price shows an old low right here, and below old lows we know there's going to be sell stops resting below there, and the price drives down below that, taking out an area of sell stops or running into a liquidity pool. But it goes specifically down into that one level that we identified on the daily chart, being 0.7512. Price trades down into that level and slams right into it. Now we are in turtle soup conditions. That means a break below an old low, we could potentially expect this market to run higher. When it hits this level on an hourly chart, we can simply wait. We're going to wait for confirmation that the market wants to go higher from that level. In other words, we're going to wait to see if the bank sponsors that level. If they do, we already know by looking at what we've learned in the first month, there are buy stops above these equal highs. Right above here, there's equal highs. And I'm going to ask you before I show you again, where else would you expect buy stops above the marketplace to be residing in this chart? That's right there. So buy stops are above us, so we can map out areas at which we can look to take our profits before we even put the trade on. That's important. You need to know where you're at in terms of risking and rewarding. Where are you going to take your profits? Where do you think the market's going to be drawn to? And why should the market react at these specific levels? So by looking at that 0.7512 level, that's important because we know our trade is being framed on the daily chart. It's not a 5-minute setup. It's based on a institutional level on a daily chart. Now here we have the market trade up through the down candle right in here. That's the bullish order block. Price trades through it here. Once it happens, we identify the opening and the high on that candle. That's where the buy would occur. Okay, so in this area, if we use the opening on that candle, we're going to add our 5 pips spread to it, okay, and build that in. And you can see our order would be around 0.7542. That would be our limit order. So we would be long there. When this candle drops down into it, we would reasonably expect to see our entry to be filled at that price point. Now, obviously, if we're going to be long there, the parameters for trading with 6% setups, because our aim is to first get ourselves in sync with trying to double our money over the year, not this week, not this month. We're trying to double our money over the year. That's low-hanging fruit. That's easy for a new aspiring trader to grow into. It doesn't give you the pip drunk mentality. You're not trying to force $1 million into your account right away. It's gradually adding affluency. So you're going to define your risk by saying, okay, I want to take a stop at 20 pips. Okay, and guess what that does? It puts your stop below the middle of that down candle. So you have a good risk model here, and also it's framing it really well because we don't want to see price go down below the midpoint of that down candle again. It's already shown a willingness to drop below here and take the stop. So it wants to obviously want to go higher. If it's going to go higher, it won't come back down below the middle of that down candle or bullish order block. So our stop's at 75.22. Our entries at 75.42. We have a 20 pip stop loss. And obviously, as soon as we get to this level here, we're already at 1-to-1. So at this point, we could be long here. Right here, we're already at, guess what, 1.5% profit. Now, once we get to 1.5% profit, does that mean we collapse the trade? We can. Absolutely, we can. That's a 1-to-1 gearing. And we would make our 1.5% return. And it's that quick, you're over. In a couple hours, you're done for the week. But what did we first start this trade with? We framed it with the buy stops up here and the buy stops up here. So when price goes to our first profit, we can start taking our risk and reducing it, taking some of it off. In fact, we could probably do this. We could take half the position off, and guess what we'll do? We'll make 0.75% return on the trade. Once it gets to this level here, right up here, that's first objective. So now we've already banked 0.75 or 0.75%. And we are allowing the price to expand up to another level. So now guess what? As soon as we get to this level here, we're back at 1.5%. We made another profit objective here at a multiple of 2. So now we're at 1.5% again, but we've already banked 3/4 of 1%. Now, mind you, the 1.5% is open profit. It's paper still, it hasn't been realized yet. But have we reached into the buy stops yet? No. We have not seen anything in terms of these buy stops over here being reached into or swept. Guess what happens? Multiple 3 comes in here. Now we've added another 20 pips of profit, and we cleared out the stops. We can take another portion of our position off. We can take 1/4 of it off. We can take a half of it off. Whatever it is that you want to do. I'm not giving you any structure yet, but I want you to think about paying yourself right here. Okay? And you would have done well over what would be necessary to make 1.5% return. And you graduated your exits based on logical areas of where price should reach. At this point here, after your second multiple is reached, your stop needs to be at break even. So you'd be down here at your entry. So now you would have, right now, no way for that to take you out below your entry point, okay? And you've already banked a position in the position that you've scaled out some. And obviously multiple 4 is hit, gets real close to where our buy stops are, so we would reasonably expect this to do what? Maybe consolidate, maybe retrace a little bit, but still reach for another area of liquidity above these equal highs over here. And then ultimately we get a multiple of 5, it clears out the buy stops over here, and guess what? I'll leave you to study this in terms of how many opportunities you could have done in terms of scaling if you would have kept, took off half the position at multiple of 1. In other words, if you made 20 pips, if you've taken half of it off and you let the remaining half run all the way up to get these stops, how much money would that be? How much percentage would that be? What would that do for your account? What if you took off 1/4 of it here at 20% and let the remaining balance run? What if you took off 3/4 of it off here and left 1/4 of the position on to run? All of these things are for your study, and it's important that you do this because I want you to think about what is available to you. This is only one setup framed on a daily chart, and it was aiming for what? Buy stops we've already identified. Those buy stops were reached into right there. Everything that was shown to you in month 1 was used here in an illustrative purpose. So now you can see how easy it is to get that 1.5% return a week, and you don't need to get it in the full shot where you get in and you get out, all full in, all full out in terms of entry and exit, full position on, full position off. You can graduate your position profits and scale them out, logical levels, and still allow your little bit of a portion of the position to pay out amazingly. Think about this. Let's say you took off half the position here, okay? So you have 0.75 or 0.75%. So now here you got a 0.75 or 1% again, you have 1.5%. Here's 3% return just on the second half. Now think about that. You made 3.5% on the second half, plus 0.75 of 1%. So you're over 4%. Just in that trade with graduating it and just scaling it out. Now, what if you did that every single week? Now, how about this? What if you did it twice a week? What happens if you do it 3 times a week? How much does your money grow if you trade like this? Everything is organized. Everything is specifically designed. You only execute with one specific task in mind. You buy at specific levels. You sell at specific levels. You trail your stop only when specific levels are reached for. We're going to give you all of these things. But think about this. This is a 5-to-1 setup. This is what a one-shot, one-kill looks like. And it's framed on a daily level. It's going to give you institutional sponsorship. There should be a willingness to see price rally down here. Why? Because it's off of a daily order block. The banks trade off of daily levels. So I hope you enjoyed this teaching. The next 2 will be actually giving you more detail about trade ideas and scenarios like this, so that way you can build your understanding about how you can build your equity and grow it from even a small account. And again, if we started with $1,000, okay, $1,000 becomes over $2,000 after 12 months. And I know some of you don't think that's great. But guess what that does in 10 years if you stick to it and never add another penny out of your pocket? It's over $1 million. And my question is where are you going to be 10 years from now? If you have $1,000 in your hands right now, will you have $1 million 10 years from now? You got no excuse not to now. Until next time, wish you good luck and good trading. Folks, welcome back. This is Module 2 of Month 2 of the ICT Mentorship. We're going to be specifically teaching on how to frame low-risk trade setups. Now, before we actually consider doing this, we have to consider what makes a setup worth taking. And ideally, selecting trade setups on higher time frame charts is ideal. That's the primary function of a high odds probability trade. You have to look at a higher time frame chart to give you the directional bias, to give you the institutional order flow, the support or resistance ideas that would be framing the buy or sell idea that you're looking to do. And the reason why we do that is because large institutions and banks analyze markets on daily, weekly, and monthly basis. Now, when we do these things, we're locating price levels that align with institutional order flow. This is key because if you don't have the understanding of institutional order flow on a monthly, weekly, and daily time frame, it's going to limit your exposure to high probability setups. Higher time frame setups form slow and provide ample time to plan accordingly. Folks that can't day trade, folks that can't be inside of these short-term intervals in terms of charts, they have businesses, they have jobs, they have life barriers that keep them from being able to be an intraday trader. You don't necessarily need to be a day trader. You can be using these higher time frame charts and they'll be able to frame out really low risk, high end probability setups. It doesn't require being intraday. What can we do to lower the risk in a trade? The higher time frame has more influence on price, so we focus there. The conditions that lend to a trade setup on a higher time frame can be refined to a lower time frame. Transposing the higher time frame levels to lower time frame charts is important because that way we can start to reduce the overall exposure in terms of pips for our stops. And then finally, refining higher time frame levels to lower time frame charts allows for smaller stop loss placement and by default lower risk.
All right. This is what we're gonna do. All right. So, what makes a trade setup worth taking? He obviously says daily, weekly, monthly bias, order flow, higher time frame setups form slowly and provide ample time to plan accordingly. So, I already shown you what I have planned on a higher time frame. Okay, this is my plans. I'm showing you my plans. This is how I plan everything you ever see, why I have a bias, why I think the way I do, why I do certain things, and everything under the sun, right? So, when doing this, it takes time and it takes confidence. Everything in this world takes confidence and time. If you're willing to put in the time, you're willing to put in anything you want to make it happen. So this is my weekly bias. Anything inside is red, I'm a buyer. Okay, because this is below the 50%, and on a daily, we're taking out a 120-day low, which is turtle soup scenario. So it's already a lot of things are lining up on the weekly and daily and the monthly, I think. Let me see. And on the monthly also, because we're hitting an order block right now. Well, we're going to. It's going to be, I think this would be considered a rejection block, which is the wick. And if I measure the wick right here from the high to the low of it, the 50% lines up with the daily imbalance with this yellow box. So I have a lot of things that are lining up with each other, that need to line up with each other on a higher time frame, because these are institutional biases that you need to have in order to take these trades. All right, if you're gonna be a long-term trader, perfect. If my advice is if you're gonna hold something, hold Euro USD. This is something I would hold for a very long time, because this is gonna shoot to the sky. You're probably gonna get more money than you're worth up here. Once it gets up here, I'd let it go. But I'm gonna be honest with you, I'd buy Euro USD, no problem. I think that thing is gonna fly. Euro USD. Is that twice? Do I have that shit twice? Well, Great British Pound, same thing. Because it's on a monthly. The pound is gonna. Actually, no. Oh, the pound already did it. That's why it's like this. Okay, the pound already did it, and it just went into the order block again, and it went into this order block. Boom. All right. So yeah, for forex, if you want long-term holding, Euro USD. I'm gonna wait for this to go down a little bit more. The only reason you see me place a buy is because of the imbalance that I have up here. It's a 1 minute imbalance that needs to be taken, and then it should go down again. But I don't know when it's gonna be taken. But this impulse swing right here lets me know where we're going. This is an impulse swing right here, guys. When price moves up in like an angle, not down like this is your impulse swing. Okay? This is what you measure on your Fibonacci. Okay? Not this, not that, this. The two spikes, one down, one up, where price moves very quickly up or down. Okay? That's why you see me place a buy pretty much above the 50%, because I know it's going to get up here. All right, so once it gets up there, I'm letting it go. I'll see you guys tomorrow. But that's what he's talking about. You have to go through the daily, weekly, monthly, and really pick out where do you want to be, where it's going to go, where's the liquidity, where are the buy stops, where could it possibly go next. 1 hour tells you more, 4 hour tells you a lot. It's everything coming together all at once is what he's trying to tell you. Okay, everything's coming together all at once for everything to make sense. And you could do it at a smaller time frame, and it'll still be the same. Everything is fraction, like it's a fractal. Something bigger becomes smaller, but in million pieces. Then when those million pieces break it again, turns into a billion pieces. Like it's like that. Oh, I'm sorry. Hold on, I gotta write this. What is this? Locating price levels that align with IOF. Institutional order flow. What can we do with lower the risk of the trade? Has more influence on price. Higher time frame has more influence on price. So we focus there. I'm writing it down for my memory. Holy. It broke down. Fuck. I guess I was wrong on this one, guys. Yep, definitely wrong on this one. Should have known because of this entry right here, but we're going to see what's up. Yeah, that was an entry. Yeesh. Boom. Taken. All right, I lost $300. I'm done. I'm fucking done, bro. Shit. It's all right. I'm at $500. Oh, fuck, that hurts. That hurts the ego. Whatever, man. It makes sense though. You have this bigger imbalance here on the 15-minute. Can I make it back? Since you took out the low? Nah. Let me see. Looks like I can. See, this is what I mean, bro. You're not supposed to do this. But whatever, man. Yeah, I'm just gonna cancel everything. Fuck this. Nah, man. I'll stay at 500, bro. Fuck all this. Fuck that. What is this low? Yeah, bro. This is going up, bro. Fuck. Like, I still wanted to go into that imbalance. That's the thing. Like, that imbalance just calls me and just like, yo, I'm here. I'm here. Please take me. Yeah, all right. So we're just gonna take it to that imbalance, bro, because I'm so convinced that this is it right here. Like, I'm like, bro, that's like right there, bro. All right, we took out the low. Turtle soup conditions on the 1 minute. Let's see.
Okay, sticking to our model, we used the Aussie dollar daily chart the last time. We're going to look at this same setup, and we're going to look at it in terms of refining it with lower risk. Now, I want you to look at this chart carefully because this is exactly the same chart you saw in the previous teaching. Now, I'm going to amplify on this, but it's important you understand the way the framework is here. You're going to see it's exactly the same thing, just brought down to a lower time frame chart. And we're actually going to do it in 2 scales lower. I want you to look at the fact that we have the higher time frame 75.12 level relative to the daily chart. That's what this line is here, delineating the daily bullish order block. Notice we have an old low here, and price goes through that down into that higher time frame level. It's really important you see that, because not only is it just because we're going below old lows not enough to expect a reversal. Okay, we're not looking for that just because that's the case. We're looking for a higher time frame premise. Why should we expect there to be buying down below an old low? Because this daily chart level, 75.12, is an old bullish order block because banks have bought there before. So if we trade into that level again, okay, look at the framework here. We have a hourly chart with a low being violated down into a key support level relative to a daily time frame.
These Sephora colognes are a scam. Did you know these luxury fragrances cost almost nothing to make? David and I used to spend so much money on premium fragrances.
We've noted obviously the buy stops above here, just like we did in the first teaching. And obviously the second area of buy stop. So we have upper level objectives framed on this trade. It's not a scalp. It's not a day trade. It's something that's going to give us a little bit more magnitude, okay, for objectives for hauling in pips. Now, obviously, we framed in the first teaching in this month's delivery of content, we looked at this down candle as the bullish order block, and we were looking at 75.42 as a long entry. And obviously by doing that, we framed it with a 20 pip stop. This is where our stop loss would be, which would be below the main threshold of this down candle, which is a bullish order block. So what if you want to get a smaller stop in relative terms to 20 pips? And here's a more important thing. What if you want to be buying lower and offering yourself a lot less in terms of risk exposure? Well, that's going to require us going down into a 15-minute time frame. Everything here, look very closely. This is very close to what you saw on an hourly chart. We have an old low. Price trades down below that old low right into that key level, 75.12 level. Now this up here is the buy order that would be needed on an hourly chart, way up here. But what if we focus our attention down into this area here? What can we do with this information? Well, obviously the same thing's there. We have sell stops below an old low where buy orders can be paired up on the smart money side. And you see the market trades down into that level, 75.12. So we do have a turtle soup long setup. But we don't require the price to come all the way up here before we start buying. So how can we do this and reduce risk? Well, we can take the bullish order block here, the down candle, right off of that level. And why is this a bullish order block? It's valuable and it's worth taking because this candle trades through it right here. And now we can focus on the midpoint of that candle up to its high. In that area, we could be a buyer. So we could be a buyer down here at 75.20. Okay, and have a stop loss down here at 75.07. It should not go down to 75.07. If it's going to go higher, it should go up higher from where it's at now. By doing so, now we have a 17 pip stop loss, and look how much lower we are in relative terms to what we saw on the setup on the hourly chart. Way closer to the key level of 75.12, and we're using a 15-minute time frame to do it. So look.
I want to give your attention to here, right here. What this is this would be called a rejection block. A rejection block would be after a low is taken, and it becomes an order block itself. Okay. This is what a rejection block is. Okay, so the wick that took out the low is the order block itself. Okay, like just like how this wick is here. And it just didn't respect it. But this wick right here respected. And then the bodies of the candles are staying above the 50% of it. This would be considered a rejection block. Okay. Yeah, I just want to give you that attention right there. We're going to learn about rejection blocks soon.
Looking at it in terms of even further reducing the risk, we can take this small little area in here and refine that same sample size of data. Okay, and we're going to take a closer look into it. Okay, so we're zoomed in now on a 5-minute chart. All we're doing is looking at that same 75.12 level. Okay, and we're refining the entry from 75.20. What can we do differently here? Well, let's take a look at what's going on inside this yellow area. Okay, we have price with another down candle as it hits that bullish order block, 75.12 on the daily chart. This down candle gets violated right here. So now we can start looking at this down candle from its open or high down to the midpoint, and we can be a buyer there. Or we can just simply say, okay, well, that's basically the 75.12 level. We'll just add the spread to it in terms of buying. That puts us in around 75.15. Our stop loss could still be down here at 75.07. That's less than 10 pips. Less than 10 pips on a buy. Now you can refine this where your risk is 8 pips here, and then first profit of 8 pips above here, second and third. So we have a multiple of 3R before we even take out the buy stops above this old high on a 5-minute chart. Now notice this is not even the buy stops that was framed on an hourly chart. All we're doing is using the price action on the time frame we've executed on and looking at where price is going to be reaching for. So if we have a multiple of 3R, or in other words, we've made 3 for every $1 we risked. So the price has already moved 24 pips up from our entry in here. And our stop is only 8 pips below where we would enter at this old low here. Notice also, by refining our risk like this, we're actually getting multiple of 3R reward for our $1 risk. As we hit the entry that would be assumed on the hourly chart at that 75.42 level, we're hitting that level here with lower risk, and we're getting a 3-to-1 reward ratio. Think about that. The risk to reward is $1 for $3 to be made, or in terms of reward to risk, we're looking at $3 made for every $1 risk. So it's amazing how you can take this and refine it down to smaller time frames. You don't have to have big, super wide stops, but it does require you to understand what you're doing and why you're doing it. You just can't get in there with these ultra short stop loss orders if you don't understand price action and why it should be responding on these levels. Looking at how traders make 10% per month. And we're going to stick with our theme here using our case study on the Aussie dollar. Now, quickly, obviously going through everything we've gone through in the previous two sessions. We've identified a 75.12 level on a daily chart. We brought that down into a hourly chart. We noticed that there was buy stops above us, so we know that there's liquidity pools resting above those specific highs. So the market should be reaching up there as much as 100 pips from the level we're identifying, 75.12. So very easily get up to 76.12. Looking at the 15-minute time frame, as we've shown earlier in this series, we've shown that there was a buy set up at 75.12 on the daily chart. We had a old low. Everything that we referred to and what to focus on in September, everything is being identified in this specific case study. We don't really require the market to give us an hourly setup to get in and use that risk. We can use a 15-minute time frame and use the framework that price gives us on that specific time frame relative to what you see on a 15-minute time frame. Obviously, the risk can be reduced from what we'll be seeing on an hourly chart, and then just as well, the 15-minute chart can be reduced down into a 5-minute chart, and we identified where the stop could be in relative terms to the bullish order block. And we also framed out where 3-to-1 reward to risk ratios would unfold, and it happened to be right below our first area of buy stops, or the 5-minute liquidity pool. Now, this is nowhere near the level of the objectives we identified, just framing the trade on an hourly chart. I'm just giving you the context. What if we were to look at the market like this and say we traded this particular pair and we had a 2% risk on the trade? If we had 2% on the trade and the market trades up to this high where the buy stops are, that's a liquidity pool, the market should respond off of that 75.12 level because it's a daily chart reference point or bullish order block. If we take our 2% position and take half of that position off as we get 3-to-1, notice it doesn't have to even blow out the buy stops here. These buy stops don't even have to get blown out. This is 3-to-1 reward to risk. So we can take first profit and bank a 1% times 3R. So we can make 3% on this one trade here. And
to like visualize what he's talking about is this. He's pretty much doing this, okay? So let's take example of this trade, okay? And I want this trade, right? This is what I want. So the percent on the risk, and I'm taking it from this low. So he's pretty much saying if I want to risk this amount and I double this, so right here, boom. Now I'm at 1-to-1. Now I'm at 2 R. Now I doubled my risk. Now clone this. Now I'm at 3. Okay, this is what he's saying. He's literally saying this. I don't know how else to explain it. This is what he's saying, yeah. Let me make it look like his thing right here. Delete that. Okay, so this is what he's saying. So if I'm willing to risk that much, this is the reward to risk ratio I'm willing to get. So I'm risking 1 to 3 reward. Okay, that's literally what he's showing you. He's saying whatever you're willing to risk, copy that and put it above it, and then copy again, and then copy again, and then copy again. That's really what he's showing you. Okay. So I know it seems mundane, or like, why do I need to know this? It's because you're new. So you don't. What you want to do is you want to make money already, which is fine. Like, I get it. I've been through that. But then you're gonna have to break yourself down. I mean, like, you got 5 years, so you're good. Like, you got 5 years, my nigga. You got 5 years to be rich. Once it's 2030, you're fucking cooked. That's all I gotta say. You're cooked. At 2030, you're cooked. Okay, so this is pretty much what I'm willing to risk. All right, we take our TP here, or we take it up here, whichever it is. I don't care. But we took the trade. We did it. We did it. We did it. Hooray! So yeah, that's literally what he's showing. He's saying, this risk that you're taking right here, because this is where your stop loss is at, you mirror the risk to this, to green, because you're positive, right? And then you double it, and then triple it, and then you do it again. You do it again right here. Clone. Boom. Now you have 4 to 1, right? And then what would you do here? Once it gets to 3, you would put your stop loss in your 1 position, and then you just slowly do that. That's literally what he's describing and what he's doing, and showing you how to look for your trades and how to risk it properly, right? So I'd take the advice. I'd take it. I'll be honest with you, I'd take the advice. Yeah. Consolidation. Swing, boom, down, turtle soup, up, yeah. So let's continue the video until we get into our TP, and then I'm going to stop the video.
Still leave the second portion of the trade on, aiming for what? Those liquidity pools referenced on the hourly chart. Now, as price explodes and goes through those buy stops, obviously you can see going up to a 15-minute time frame, now we can go and look at higher liquidity pools, reaching into higher and higher grade liquidity pools until we get to that hourly chart. But for right now, just simply look at what's already happened. The framework we used for the 5-minute chart that we've outlined in the second session, that model on risk allows us to have 1, 2, 3, 4, 5, 6, 7, 8, 9 R. In other words, we made $9 for every $1 risk, just reaching into the 15-minute buy stop liquidity pool. The liquidity pools that we saw on the hourly chart, that's what's being identified for objectives. But now here we have a crossroads. Can we take some of the position off here, or do we leave the second balance of the original position of 2%? We only have 1% remaining on. We could take a portion of that off, or we can leave it to go higher and reach for those higher objectives. The choice is going to be yours. Preferably, I think I would like to take something off because we're in a really nice liquidity pool relative to the 15-minute time frame, and we might get some consolidation, or could be wrong, could even reverse here. We don't ever know that. But we are trading with higher level institutional order flow relative to that daily order block from 75.12. We've seen expansion on the upside. It's now taken buy stops in the form of a liquidity pool in the 5-minute chart we just shown. Then now we see the 15-minute liquidity pool and the buy stops over here. That's been violated. So we've already seen 9-to-1 payout, which is astonishing by any measure. And then letting the price go a little bit further, once we clear this buy stop, the area over here would be reached into as well. And we'd have 15R as well. Now this is the liquidity pool that we're resting around that same hourly basis. I'm just viewing it in terms of the 15-minute chart. You can see the expansion that's available to you when you look at the market, framing it with very low risk. Very low risk. Now, notice also, we took first profit at a multiple of 3-to-1. So we made $3 for our $1 risk. As soon as we did that, we've already made 3% on the trade with ultra short-term risk, less than 10 pips. That was it, less than 10 pips. But let's just say we framed the trade with a little bit more than that. Say we used a little bit more comfortable stop. Say it was a 20 pip stop. Could that still pay out in handsome rewards? Why wouldn't it? Obviously, the market reaches above the stops. We know that the market reaches for 10 and 20 pip grades for stop sweeping. We have the old high back here. And price just gets real close to it, but expands right above where we would expect to see price reach for. Here's what I want you to focus. The potential range was about 100 pips from where we were looking at buying and where we thought the price was going to go. We don't need the absolute high and we don't need the absolute low. We're looking at the lion's portion of the move, about 100 pips. Let me ask you a question. Do you think you'll get every pip of every potential range you identify as potential profit? If you're insisting on it, you're going to be frustrated. But you don't need that. What happens if you just had half of the range? Would you be disappointed? If you say yes, you would be disappointed. My question is why would you be disappointed? Is that better than what you're doing now? As a new trader, it's probably going to be very easy for you to say, well, that would be better than I'm currently doing now. Let's look at some numbers.
All right, this is very important, guys. You have to pay attention to this. This is where a lot of traders, including me, in the last 4 years, we always lose. What makes us better traders is how we lose and how we react to price. But this is how we lose money and gain money. I know what he's doing is small numbers, and you're saying, "Oh my God, $1 a week, $30 a week, what?" But you got to think about it exponential, not multiple, exponential. All right, please pay attention.
Assume for a moment we had a $1,000 trading account, and we set the trade up originally as we did with the 5-minute chart, less than 10 pips. We're going to say we rounded it to a 10 pip stop loss. And the market came up and allowed us to get our 3-to-1 multiple. In this trade, we would already have 3% paid to us. Now, we're going to assume that you've gone through the mentorship, you've learned how to do this, and you've gone to the point where you are comfortable trading with live funds. Or maybe you're still in the demo account. If that choice is yours, you have to make the decision and timing for your own sake, I can't do that for you. But say, for instance, you're looking at the trade and it's framed just like we were outlining it here. And it allows you to get a 2% position on. In other words, the trade is 2% risk. If you have the opportunity to get 3 to 1 paid out and you take that off your position, now you have 1% remaining. The first 1% taken off with a multiple of 3 to 1, you'd be taking profits at 30 pips. You've already banked 3%. Look what that does in a month. By itself, it's over 10%. So even if that's all you get is the first profit objective of 3 to 1. So if you frame your trades with really small risk, it's easy to get multiples of 3 to 1 or more for your reward. So your R levels are easy to get to when you start refining your risk. See, it's not having big risk that makes the money. It's having the small risk that makes the money. That's the real secret. The fact that you need to be able to frame your trades on levels that should see institutional sponsorship. That means, should the banks propel price higher or lower because it's off a daily chart or weekly chart or monthly chart? Those levels are going to be highly impactful in terms of price action. They're going to drive price higher and lower relative to those levels because that's where the real orders are. It has nothing to do with your indicators. It has nothing to do with your supply and demand or your theory on price. It has nothing to do with that. It's where the orders are. And the orders are going to be around monthly, weekly, and daily levels. Now, what if you let the portion of that second half go and you only got half of that 100 pip range? Remember, we were looking at that setup. It was potentially 100 pips available to you. But say you only let it go 50 pips and you just couldn't bear to hold on to it, and that's all you could do. Or you did something that got you stopped out early. Okay, you trailed your stop up too aggressively, and you only managed to make 50 pips out of that. Now, this is assuming you've already taken that first 1% off. This is the second 1% that's remaining on the trade. By itself, if you collapse at 50% of that 100 pip range we're looking at, you're tacking on another 21+% for the month. If that's all you're doing week after week, if you're getting scenarios like this, one trade, you're focusing in tightly, watching one setup, and you are milking it for everything that it's worth, keeping the risk small and looking for higher time frame objectives. If you do that, you're looking at 21+%, what it's going to call it, 21, plus your original 3% on the first half of that trade. So really, what are you making? And you didn't even get the entire 100 pip range. Now think about that. We used the same scenario where we used a 10 pip stop, and we let the second portion run after 3 to 1 was taken off at 30 pips. Then we let the remaining portion run and say we only managed to get half that 100 pip range. Who would be upset? Would you be upset with that? I don't think you should. If you are, it's greed. You can't allow greed to do this to you. Now, what happens if you get the entire 100 pip range? Say you get your 100 pip takedown. No, one shot, one kill. You get it for the entire week. The second portion of that trade nets you over 46%. That's in 1 month, okay? If you let this continuously pan out and you do this every single week and you're looking for one shot, one kill scenarios and you get 100 pip objectives taken down on the second portion of your trade, remember, you're already taking partials off at 3 to 1. So you're taking 1% off. If every trade you take is 2%, once you know what you're doing, you scale off 1% at 3 to 1, and you wait for the second portion to reach for these higher time frame objectives. That's how you make a lot of money. You pay yourself initially, get paid, pay the trader. Take partials. Don't listen to people that don't make money. You have to pay yourself because you don't know if your trade's going to pan out. But once you get 3 to 1, you're already living in an environment that pays exceedingly well. Think about that. If that's all you managed to do is get first objective at 3 to 1, it's all you ever did, nothing ever panned out beyond that, who would be complaining about that? Only folks that are demanding precision beyond your personal efficiency right now. You can't do it. You don't have that level of efficiency yet. You can grow into that over time, but you have to allow that time to take place. But if you get these one-shot, one kills where you're looking for a nice weekly trade, of a 100 pip range. You don't need the 100 pip range to pay you out handsomely. But if you go in aiming for it, once in a while, you'll hit it. And we'll just play devil's advocate for a moment. And again, we're going to assume for a moment you did. You're able to take down 100 pips a week. It may require you to do another trade to pan out to get to that 100 pips. I'm not telling you to force yourself to get 100 pips every week, but it may require you to do a second trade or a third trade. Or you may take another trade and it reduces you down to just this. You can lose. You're going to have encountered barriers like everyone else does in trading. But if you're making your second portion of your trade paying out and you're reaching for higher time frame objectives, like we just framed with this trade, a low risk trade that's been framed on a higher time frame premise with the things that I taught you to focus on the month of September's content, the second portion of the trade will always make more than the first. Obviously, you're getting out early with a partial. With a partial is not a weakness. It's not an impediment to you making more money. When traders or educators or other folks say that you're taking off some of the trade before it gets to a profit objective that you've had in mind beforehand, that's coming from someone that does not make money consistently. And I'm telling you, because they're forcing themselves to hold on for their ultimate objective, and they're too black and white. In profit taking, you have to pay yourself when it's available. If you're binary, it's all or nothing, you're never going to be as good as you think you are. Believe me, I'm very proficient with price action, but I don't demand everything all off at my profit objective, my higher end profit objective. I've learned to pay myself because there's many times I've had really handsome profits sitting in a trade, but I did not allow myself to take something off, and I watched it come all the way back and turn into a loser, or come back and take me out with a modest stop loss and then run in my favor, which is very frustrating, and you've probably encountered that yourself. But let's say, for instance, you couldn't manage to do that trade with 10 pips, and you were just stuck to that 1 hour setup. No problem. No problem. There's no reason to be upset about that. If you allow that 20 pip setup to give you a 50 pip run, okay, think about this. If you take the first portion of that trade off and you only get 50 more pips beyond, in other words, you've placed your trade on and you paid yourself a modest 30 pips, moved to the sidelines, and then you only managed to get another 50 pips. Well, you made over 10% right there on the second portion of the trade. Think about that. It's not about how many perfect exits and entries you get. This is after your first profit. You pay yourself something and then let the partial run. The balance has to run, and that will always pay you more. And here's the thing, the psychological effects of it not being a trade that's already paid you. You've taken some skin off of it, and that's good because you have 1 pound of flesh now, okay, for your time, your energy, and your focus in that marketplace. When you focus on trading like that, 10% in 1 month on the back end of your trade, that's not just, we've already factored in counting the first portion of your trade. That goes without saying. That leads to 12% by itself. But if you can't do those ultra short-term trades, you can still do trades like this. And that's still handsome. 10% compounded over the year is over 300% for the year. And that's amazing. Where else are you going to get 300% return? There's no money manager out there going to raise his hand and say, I'll do that for you. There's no fund manager who's going to say, hey, look, I'll double your money in a year. I can consistently do that. I'm going to work hard to do that. They're not working hard for your money. Okay. They're doing very little. They're very lazy. And you're going to watch your money better than anybody else. So when you see things like this, it's real important you focus on that number is an astonishing number. You can do very, very well with tripling your money every single year. 10% a month compounded does that.
Achieving.
Like, I truly hate ads, bro. Holy crap, bro. Look what you did, bro. Made me skip a fucking video. Jesus fucking Christ. I don't want to hear your fucking jingles, bro. and then fucking I get a copyright strike because of your fucking jingles on your fucking ad. Because you're trying to fucking convince sheep people to buy your fucking product, bro. Trying to learn how to make money, bro. Trying to teach people how to learn how to make money. Like, bro, I'm telling you right now, I'm letting ICT talk this month. I can't help you explain this any more than what he's saying. Okay? Look at the chart. Look what he's saying. If you don't want to look what he's saying, cool. Wait until we get to month 3. Don't care, bro. Because just like we said, no one's going to pay attention to your money better than you. Because if you give me your money, I'm not going to pay attention to it. I'm going to take the lowest risk possible, the slowest way. That's it. I'm probably going to trade on it once a month. That's it. For my money, I'm trading almost twice a week, nigga. 3 times a week, nigga. Even 4 times a week, nigga. Bro, like I'm trading. Well, how many trading days are in a month? 20 days. I'm trading. I'm at least trading 10 days out of that month, 15 days out of that month. Make sure I get more than 10%. Okay. So this whole process is not for me to tell you how to trade, bro, or me telling you, oh, take this trade. There's a reason why I'm placing trades in front of your face. Okay? These are examples. This is how price moves. I'm letting you. I'm showing it to you. I'm showing it to you, bro. I just lost $300. You don't see me freaking out because that's 4 years of experience of not freaking out, bro. Okay? So, listen, bro. It's all on you. If you want to learn, all on you. If you want to listen, all on you. If you want to think about this every single day, it's all on you, bro. Stop doing drugs. Stop drinking alcohol. Stop fucking bitches. Stop listening to people. Stop listening to your mom. Stop listening to your dad. Stop listening to your friends. Stop listening to your brother. Stop listening to everybody and listen to yourself. That's it. Stop listening to your aunt. Stop listening to anybody. I don't care. If they're in a place where you want to be, listen. But if they're in a place that you don't want to be, take it with a grain of salt, my nigga. That's all I can tell you, bro. See, I'm here to help you and go through this with you. Okay, so you don't feel like you're doing it alone. All right? It's always nice to have a partner with you when you're doing things. It's nice. But I'm going to be honest with you. I'm going through this only once. All the 12 months. One time. And then I'm restarting it. And then I'm starting the next mentorship. Okay? This is all on you. I can't make you listen. I can't make you write. I can't make you think. I can't do anything. I can only show you. I'm not going to do anything for you. I'm not going to do anything for you. I refuse. I'm not going to press the button for you. I'm not going to tell you to do anything. I'm not going to tell you a goddamn thing. No. I'm not that person. I'm the type of person who shows you the water, and it's up to you to drink it. I'm the type of person that shows you how to fish, and it's your choice if you want to learn how to fish. You want to learn how to fish? You want to learn how to eat? This is how you learn how to eat, by listening to people who are better than you. I'm not better than you. He's better than me. I'm just his sidekick. I'm going to be honest with you. That's how I think of it. I'm his sidekick. All right, I'm a very selfish person. I'm just his sidekick, bro. I'm just adding context. That's all I'm doing. I'm adding real life context because this is 2016. We're in 2025. We have to 2030 to make money. That's it. There's no middle class. It's just gonna be lower class and higher class, upper class. Okay. There's no in between anymore. So if you want to make it, you have 5 years. You have 5 more years, man. If you don't make money in the next 4 to 5 years, you're fucked. Okay? Just saying. Just putting some fire in your ass. And if you want me to make a video on why, I'll make a video why you have till 2030, the year 2030. You're gonna get fucked financially. All right. So stop doing drugs. Stop jerking off. Stop thinking about bitches. Stop thinking about the money that you're supposed to be making because of your age. And humble yourself and be like, all right, I'm a newborn baby. I was just born yesterday. What do I do? What do I do? It's up to you, man. You want to keep doing drugs? Cool. You're not going to learn anything. You want to keep drinking alcohol every day? Cool. You're not going to learn anything. You want to keep fucking bitches? Cool. You're not going to learn anything. You want to keep watching porn and jerking off? Cool. You're not going to learn anything. You want to keep watching Netflix and movies and not do anything all day? Cool. You're not going to learn anything. The power is with you. I'm showing you the power, how to wield it. I can't do anything for you. I'm not. I'm just showing you. Showing you. If you wanna be successful, this is what it takes. Grinding. Putting your head down. Shrugging off people's opinions about you. Stop trying to keep up with the Joneses. Stop it. I don't need to stop trying to impress people. Stop trying to make people be below you. Stop trying to do anything with these things. Because God's watching. Oh, he's watching. He's watching. And when he watches, he makes sure to put his thumb on your neck. To keep the lessons going. Keep putting you down. It's like, oh, you haven't learned? Okay, here, more pressure. Oh, you haven't learned? Here, more pressure. Oh, you still haven't learned, bro? It's been like, what? Bro, it's been like 25 years, bro. Like, you still haven't learned? All right, cool, boom. More pressure. Oh, damn, it's been like 45 years, bro. You still haven't learned? All right, here, boom, more pressure. But he's still going to send you blessings, but he's going to send them in ways that you're not going to recognize it because it's been too long. You're not as naive. So, see, it's good to be naive. It's good to be manipulated a little bit. It's good. Because how you're going to learn good manipulation and bad manipulation? You know, it's good. It's good both ways, man. So when I'm doing these live streams, I'm not doing it because I want people to look. I'm doing it because at least I'm trying to, like, help people. You know, I'm trying to help you understand this while doing other things, while giving other opinions and doing everything. Like, I'm just trying to help you, man. But I can't make you climb the ladder. I can't make you drink the water. I can't make you fish. I can keep selling you fish. Is that, like, this is something I never understood. Blessings don't come with a paywall, my nigga. Blessings don't come in a paywall. Blessings are free. You knew that, right? You probably didn't know that. Yeah, I know. Blessings are free, my nigga. You know that, right? You probably didn't know that. Blessings are free, my nigga. They don't come in a paywall. I don't pay nobody anything. I don't pay him. I don't pay secretly. I don't pay anyone to tell me buy signals or anything. I don't pay nobody, man. I have no subscription except for HBO probably and Hulu. That's it. I don't pay anybody to learn how to make money. I don't pay anybody. I don't need to. I don't want to because every single information that you think that there is free. Anyone who's putting a paywall is just trying to make a quick buck off of low threshold information people. So if you're one of those low threshold information people, I'm sorry, but this is gonna be a long time. You have 4 to 5 years to make money, like real giant amounts of money. I'm just saying. You have 5 more years. After this, you're done. You're done. Okay? I'm just letting you know. This is my 2 hours. That's it. I'm done. Okay? I'm going to stop this video at episode 4. Okay? I got to go do some shit. Alright? So, hopefully you learned something. God's watching. Oh, he's always watching. And, stay blessed. Be humble. You already know who it is. This is the Inner Circle Trader, ICT. All his videos are free. Just get to it, man. Get to it. Get a notebook. Get 2 hours out of the day. 2, 3, 4 hours. Bro, in the beginning, I used to do 6-hour marathons on this guy. 6 hours just grinding out. Because I wanted it. I wanted it. And I was making mistakes as a trader. But I needed to make those mistakes. So don't be afraid of mistakes. That's another advice. Don't be afraid of losing money. If you have a way to get money and put money into investments to see how money works, don't be afraid to lose it, but I wouldn't recommend it. Stay to demo. But yeah, you can spiral out of control very fast. Just letting you know. And if you're not disciplined in anything in your life, you're not gonna be successful. If you're not disciplined in what you eat, you're not gonna be successful. If you're not disciplined in your workouts, you're not gonna be successful. If you're not disciplined with your consumption of alcohol or drugs, you're not gonna be successful. If you're not disciplined with your sleep, you're not gonna be successful. If you're not disciplined with your sexual habits, you're not gonna be successful. I don't know what else to tell you. Everything I just said, I'm disciplined in every single aspect. That's why I'm telling you. I don't need sex. I don't chase women. They chase me. I don't need drugs to feel a certain type of way. I don't need alcohol to feel good about myself. I don't need to jerk off for gratification. I don't need any of these things. Completely washed away from all the indulgences. The only thing that makes me happy in this life is me cooking. I'm not gonna lie. It's like meditation. Me cooking some food, meditation, bro. I love it. Walking for 2 hours outside, meditation. Love it. In the heart of nature. Do things purely. If you do things with malice and intent, with bad intent, you're gonna not be successful. Stop helping out people who can't help themselves. If they can't help themselves, then what makes you think they're gonna start helping themselves with you around? You're not special. I'm not special. Everyone's in their own journey. Stop trying to help people, especially when you can't even help yourself. Help people make money. Help people not do drugs. Help people not be sexual deviants. Help people find God. Do these things, but don't do it where you're gonna have to hang out with them every day. No, that's their own psychology. Whatever story people have in their heads is what they have in their heads. Okay? You're not here to fix everybody. You're only here to fix people who want to be fixed. Okay? That's all I gotta say, man. Like, I gotta keep saying it at the end of every live stream. I have to keep saying this. Don't do drugs. Don't do alcohol. Stop jerking off. Stop having sex with women that indiscriminately. Stop. Even if she's your girlfriend, if she's a loser, you're a loser too. Bro, listen, man. You're not going to make money after 2030. I have to repeat this. You're not going to make money in an exorbitant amount after 2030. That is the door closed. You have 4 to 5 years to do this. I'm already 4 years in. I have 5 more years. I'll be at 9. You're not going to be able to make money at 2030. I'm already giving you a time limit. You think you're not going to learn this in 5 years? You got me fucked up. You got me fucked up, man. I actually tell you why I'm taking trades. I actually tell you why I'm showing you this. I actually tell you everything that I'm looking at in real time. I'm trying to expedite you. I'm trying to get you up there, man. Instead of spending 4 to 5 years learning, I'm trying to cut that in half so you can start making money. But it's gonna take you in time. It's gonna take you in time. That's all I'm gonna do. That's all I can say. It's gonna take you in time. And I'm sorry that you have any ailments that I've mentioned. I'm sorry that you have these things that you think you can't live without. I'm here to tell you can. Ex-drug addict here. I don't crave it. You know why? Because I have purpose. You know why I'm telling you all these things? I'm trying to give you purpose. That's why I'm telling you at 2030, you're not going to be able to make money. How does that make you feel? Doesn't that give you inspiration and purpose? Doesn't that give you fire in your ass, fire in your soul? When you have a fucking time limit, especially when you're a man and you have a time limit. Yeah, you're going to start working fast, aren't you? Yeah, nigga. Yeah. Keep wasting 24 hours in a day. Not exercising, not eating right, not watching the right content. Keep doing it. Keep fucking doing it. Because all you're doing is compounding interest. I'm telling you, you're compounding interest. When you smoke weed, when you do coke, when you do Molly, when you drink alcohol, you're compounding interest. I'm telling you, you're compounding interest. Stick to coffee and nicotine, man. Not the vapes. Hookah. Alright? With the shisha thing. Cigars. Not the cigarettes. Cigarellos. Real cigarellos, not the synthetic ones. With real tobacco in it. Alright? So, like, listen, man. Minimize. Minimize, 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 minimize. Stop trying to show out. Stop going out. Stay at home and fix yourself. Stop trying to fix your brother. Stop trying to fix your sister. Stop trying to fix everybody else if you can't even fix yourself. Okay? I'm just letting you know. Just letting you know, man. Alright? And with this, I'm ending this live stream. It's already 2 hours. I'm capping at 2 hours. I'm done. I'll see you tomorrow, 7 a.m., 8 a.m., around there. And then I'll see you again that same day around 7 p.m., 8 p.m. And we'll do another 2 hours study session, okay? Oh yeah, learn how to play chess. I've been learning how to play chess too. And I've been learning how to speak Korean. I have a few phrases, but I don't have them with me. Well, they're here. They're here in my little white book. This is difficult though. I got ka, ta. I learned the consonants sat, pat, tang, nang. Yeah, all that shit. So, yeah. What else can I give you? The world doesn't happen to you. The world responds to you. That's some good advice. The world doesn't happen to you. The world responds to you. So whatever's in your head, it's what's out there. Whatever's in your heart is what's out there. So if if you think everyone's a racist in your head, then everyone's a racist out there. You're gonna try and find it. So if you think everyone's a good person, then you're gonna find good people. You can find some bad people, but hey, and everyone here, especially where I live, everyone's a good person. No one wants any really problems. But yeah, man. So focus on getting healthy. Stop overindulging in sexual behavior, drug, alcohol behavior, nonsense content. Okay. Yeah. Hopefully you learned something. And I'm gonna end the stream right here.